But in a world that increasingly resembles a financial roller coaster, their quiet, steady reliability is becoming more attractive than ever before. Markets swing wildly from one week to the next. Geopolitical tensions are reshaping trade routes and alliances. Inflation has quietly eroded the purchasing power of currencies that billions of people depend on every single day. Central banks are printing money at a pace that would have seemed unthinkable just a decade ago. And through all of this noise, one question keeps surfacing for everyday investors and seasoned financial minds alike. Where exactly is the safest place to put your money when everything around you feels uncertain? The answer for many keeps coming back to the same timeless assets that have preserved wealth across centuries of human history. Gold, silver, and real estate are not flashy. They do not promise to make you a millionaire overnight. New section content. Gold has been a store of value for over 5,000 years, and that track record is not something you can dismiss lightly. When currencies collapse, when stock markets crash, when governments default on their debts, gold has consistently held its ground. In recent years, central banks around the world have been accumulating gold reserves at the fastest rate in decades. Countries like China, India, and Russia have been quietly moving away from dollar-denominated assets and toward physical gold. This is not a coincidence. These are strategic moves by some of the most powerful financial institutions on the planet, and they are sending a clear signal. When you invest in gold, you are not just buying a shiny metal. You are buying insurance against the unpredictable. You are buying a hedge against inflation, currency devaluation, and systemic financial risk. Whether you choose physical gold, gold exchange-traded funds, or gold mining stocks, the core principle remains the same. Gold protects what you have built when the system around you starts to crack. While gold often takes the spotlight, silver deserves far more attention than it typically receives. Silver is unique because it functions both as a precious metal and as an industrial commodity. It is a critical component in solar panels, electric vehicles, semiconductors, and medical equipment. As the world accelerates its transition toward clean energy and advanced technology, the demand for silver is expected to grow significantly over the coming decades. Yet silver remains dramatically undervalued relative to gold when you look at the historical gold to silver ratio. Historically, that ratio has hovered around 16-1, meaning 16 ounces of silver were worth 1 ounce of gold. Today, that ratio sits far higher, suggesting silver has enormous room to appreciate. For investors with a long-term mindset, silver offers a compelling combination of safe haven value and industrial growth potential. It is accessible, it is tangible, and in a world hungry for green technology, its relevance is only going to increase. The fundamental logic is the same. You are owning a piece of the physical world, and that ownership carries real, lasting value. And the reasons for that are deeply rooted in human nature and economic reality. People will always need places to live, work, and conduct business. Land is finite, population continues to grow, and unlike stocks or bonds, real estate is a physical asset you can see, touch, and use. Over the long term, property values have consistently trended upward even when accounting for periodic downturns. Beyond appreciation, real estate generates cash flow through rental income, providing a steady stream of passive income that compounds your wealth over time. In an era of rising inflation, real estate acts as a natural hedge. The investors who come out ahead in turbulent times are rarely the ones chasing the hottest trend. They are the ones who build diversified portfolios anchored in assets that have proven their worth across generations. Gold, silver, and real estate are not relics of the past. They are the foundation of a resilient financial future. The world may be unpredictable, but your strategy does not have to be.